Hello and welcome to Premium Interest. I am Frank Omalape. We're talking about the capital importation into Nigeria in the second quarter 2018, and according to National Bureau of Statistics, the capital importation dropped by 12.53% in the second quarter compared to what we had. If you put that in terms of money, that's about 5.5 billion compared to the result we had in the first quarter 2018. Well, to put perspective to this now, how these impact the market and the general outlook of the country's economy is what we're looking at. And my guest is Aruna. Kebira is a chief dealer, Global View Capital Limited. Thank you for joining me on the show this afternoon.
Thank you for having me.
Yeah, I'm sure you've seen the result for the second quarter, talking about the capital importation into the country. There is a marginal, or let me not say marginal, now there's a decrease from what we had in the first quarter. Is it good or bad news?
What I will also want us to look at, let's go back to the basics. What affect your GDP? We understand that when you are calculating GDP, is gross national product plus net inflow from abroad. It's either it is positive or it is negative. If money goes out of the country more than it comes in, then it will be negative. But if it comes in more than it goes out, it will be positive. So that definitely is going to affect your GDP. What this reduction in capital importation portend for the market is because you see this importation we are talking about, they say that is going for foreign direct investment or it's going for portfolio investment. We understand that around the market space where we operate, foreign investors have come to take the center stage whether we like it or not. Because whenever they are around, the market feels it. And whenever they are absent, the market feels it. The only people that are left to take the market are the PFA and other institutional investors. And no wonder you will see that the Osher index has been declining in these past few weeks.
It's so evident that this is how the current market is structured at the moment. But how do you think we can leverage in terms of advantage when we have this money coming into the country in excess compared to when, of course, we don't have much coming into the country?
As they actually be in excess, I don't think that they are being in excess because the more money that comes to the market, the more the market bubbles. If you look at what happened in January, the market went up because of the liquidity that was in the market. The more money that is coming, hitting the stock market, and the more liquidity that will be in the market, and the more you see the indices looking up, both for the stock prices and the Osher index.
But if you take a look at this figure that we're looking at the moment on the general outlook of the country's economy, what would you say about it?
Like I told you, you see, that is still liquidity because it shows that fresh money is not coming.
It's not coming.
The one that have come has been used. And we understand that for investment, especially as this country is concerned, we need fresh fund for investment. It means that the volume that have been coming before has been reduced. What we should also understand is that what has come in, what impact has it had? Then now that it's reducing, that means that the impact that we have felt before is definitely going to decline.
Okay, we usually, of course, what we had in the second quarter, the first quarter rather, was much more compared to what we had in the second quarter. Would you attribute that as well to perhaps the political space or the activities in the political space that we at the moment? What would you attribute that to?
I believe so. You see, I don't know if I used to tell somebody, if you walk into a married man's house, and you see that the wife and the husband carry pesto, they want to break their hair, what will you do? You will tell them, please, I'm coming back. Because you will go until they have put their houses in order before you come back. This is a pre-election year, which is different from what we have seen, because the one we have in 2014 to 2015 was a little bit different from this, because now we begin to see altercation, utterances that are actually not supposed to be, because we understand that these guys are just standing at the borderline and are watching what will happen. And I believe by the time we get it through, they will come back.
But it will seem that we've seen the result in the second quarter of 2018, talking about earnings from some of these companies. We've seen impressive result from Transcorp and the likes of Zenith Bank. But it will seem that the capital decline, importation decline that we are seeing, it's not really taking a toll on the operations of some of these banks or the banking sector stock, or perhaps some other companies.
But you should understand that what they do is to turn around what they have, whatever they have. They are not looking for, it's only companies that are doing right issues, or maybe they are going for a public offer that will need money outside the organization. They already have working capital. That is exactly what they are turning around. So it has no bearing to whether capital importation is going or is stagnant, is stationary. I believe for good manager, that is why they retain part of the profit they make every year to plow back into the company. So they should be able to have enough working capital to not turn around, despite what the capital position is going down, it is going up.
So I was speaking to one analyst someday, and he said some of these importation of money, or hot money as you may call it, it is sometimes the bank makes use of it as well. And sometimes when it doesn't come in as it's supposed to, perhaps because of the political uncertainty, the bank also feel the heat. Don't you think so?
But can I ask you a question? What is the business of a bank? They are standing in between the lender and the borrower. And that is, I think they are still doing that business as far as this country is concerned. Their lending rate is different from their borrowing rate, so they make that difference. So when you are talking about hot money cannot eat all the banks. Like you just said that they brought that impressive bank. You talk about Transcorp. Transcorp is not in the banking sector, and their result was impressive. Guinness just released their result yesterday, and it was impressive, fantastic. There was serious growth in their earning from 1.28 kobo to 3.30 kobo, and they are giving 1.84 kobo dividend instead of 64 kobo they gave. Where is the hot money coming into Guinness? So I believe that a good manager of a business supposed to make provision for today and for tomorrow, and I think that's exactly what they are doing.
Because, like you just said again, if we're having impressive results posted by these companies, and we're not seeing, we are also seeing a trend, a negative trend in the market. For instance, yesterday the market declined. Talking about Wednesday, the market declined, and for some time now we've seen a negative trend in the market. And yet we're seeing some of this company. How can you balance the fact that we have an impressive result from some of these companies, and then we also have a negative trend in the market?
There is what they call inverse market.
Okay.
Inverse market means that the market will behave contrary to how it's supposed to be in a normal situation. And what you just asked me, we are not in a normal situation. That's why we call it a pre-election year. Okay. Yes, the results were very fantastic. Like when Transcorp released their result, the market on a normal day were supposed to respond positively to that. But the question is that there is no liquidity, that we have just mentioned, no liquidity in the market. How does it happen? How do prices grow in the market? I want to buy 20 naira, but because you need it, you now put at 20 naira 1 kobo. Another person will put at 20 naira 2 kobo. Before you know, they drive it to 25 naira. But now there is no liquidity. The man that want to buy is try as much as possible to get it at the lowest rate that they can buy it. So we will rather to sit and wait. Sometimes they come and say, I want to buy it for 20 naira. If you want to give to me, give it to me. If you don't want to give to me, I will wait. And the price will either close low or close flat for that day.
Interesting. Let me also take a look at, because the capital importation, let me also read some figures for you here a bit. According to NBS, it's saying that the largest amount of capital importation, talking about by type, one, portfolio investors, that's about 74.7% went to that. That's about 4.1 million US dollars. Beg your pardon, $1 billion US dollars went in that sector. Yeah. Other investments also accounted for about 20% of all of this. The FDI, accounted for about 4.7%. The question will be that, how do you think that in terms of leveraging on some of these, even though the total overall of this figure decline, but in terms of leveraging on some of these sectors, How do you think an investor can tap into this to leverage on some of these
an investor in the market?
In the market.
The thing is the money coming to the market from the report.
Because portfolio, sometimes it goes straight into the market and through some of these banks.
But the report on the NSA website is that between, this is August, they did not come out with the August, between June and July, there's a drop in foreign portfolio investment, considerably, like about 50%. It shows that the foreign participation in the market has dropped. So this means that this money is actually not coming into the market. If this money you are talking about, like I told you, hit the market, you will know. January 2nd, 2018, by the time we get to the market, we know that money, there is liquidity in the market. There is money flow into the market because it will be reflected in the prices of the equities. So
where do you think it will be going if it's coming to the market?
That is what I cannot lay my feet. This is the NBS. Like I told you, what they record on the macro level. But I'm telling you what NSA have in their micro level, because that is exactly what enters into the market. They keep tab on whatever I put to the market. So if they are telling us that there's a sharp drop in foreign portfolio participation in the market, then they should know what they are talking about.
Okay, we're going to talk more about it. Perhaps we should take a look at where these monies are going. Perhaps maybe the manufacturing sector. I know that it is not, some companies are on the market who are into manufacturing, industrial goods from that sector, you see. But we're going to talk where perhaps these monies are going. We're going to talk about it. And perhaps if they are actually going into infrastructure or some perhaps direct investment in the country, we should begin to see the impact in some of these sectors. Don't you think so?
But sometimes it depends on how long the investment has been. Every investment has a incubation period. The money cannot just hit the country today or hit the market today. Then you think that the next 3 months will begin to be, there are processes and procedure. When you receive the money, there is another stage. There's a workflow before you begin to reap. So chances are that even if these things find their way into the sector you are talking about, the investment,
perhaps we're going to discuss about the workflow. But we'll quickly take a break. Aruna Kebira, it's my guest. We'll take a moment now. We're talking about capital importation and the impact on the general economy. We'll be back in a moment. Join us again. Hello, welcome back. It's still Premium Interest, and my guest has been Aruna Kebira. He's the chief dealer at the Global View Capital Limited. Still here with me in the studio. Thank you. Glad to know you are still here with me in the studio. Let's also take a look at, you said earlier before we went to break that if this monies were coming on, funds were coming into the market will heal the heat. Let's assume these monies or funds were diverted. Perhaps when I say diverted, I'm saying it went into some other investment, such as foreign direct investment. Somebody buy a property, register your company, and then you start company, for instance, manufacturing company, or maybe production of beverages and all of that. That again I want us to talk about that. If we have money, such fund coming into the country, I don't want us to look at how the capital importation decline now, but general overview of the importance of capital importation into any country. That's exactly what I want us to look at.
There's something I want you to know. When they said for portfolio investment, it does not actually mean that it must hit equities. We have bonds. We have treasury bills. We have commercial papers.
All right.
So chances are, you see, the equity is riskier than these ones I'm talking about. Like those ones we call them risk-free. Especially when it's government bond, it's risk-free. The only thing that you need to do is to wait for time. And we saw that federal government have come out with a federal government service bond. They said that is in about 12.5, 30.5
Which is a good yield. Okay.
As far as this situation is concerned, chances are that is the kind of portfolio, because when you put equity, commercial paper, treasury bill, and government bond together, it makes a portfolio. So the only thing is that the apportionment of the money might not be to the favor of the equity. So maybe that is exactly what happened.
Okay, but again, I want us to talk a little bit in terms of foreign direct investment now, which is also part of the total importation of funds into the country. That again should impact on the economy in terms of creating jobs and reducing unemployment. Don't you think so?
Yes, foreign direct investment means that a national from another place just come into the country and form either make a partnership, either merger acquisition, or start a new company straight. And you know that the more companies that are created, the more chances that there will be vacancy for job, and the more unemployment will reduce. I quite agree that if foreign direct investment hit the country, there will be a reduction in the rate of unemployment.
Well, I'll need you to give us an overview of how this works sometimes in a given country, especially a country that's interested in creating a friendly environment in terms of ease of doing business.
One of the things I don't forget is infrastructure. We have been talking about the impact of energy. There's no establishment now that is not feeling the impact of energy, because most of them go on diesel. They run their generator 24 hours. So if you have a factory that runs for 24 hours, that means you are going to use like 2 generators, 12 hours, and you are going to fuel them. If there is infrastructure on ground, and what about transportation, haulage, to move goods from Calabar to Lagos, you know how difficult that it is. If those things are put in place, you don't even need to beg those guys to come, because they know exactly. This is the most populous black nation in South Africa.
And we have the numbers.
The market is here, so you don't need to call them. Once those things are put in place, they will definitely have to come, because one, they're talking about infrastructure, the road, they're talking about power, then they're talking about security. There is nothing that gives the rest of mind to an investor when you know that you can take your money to a country, invest, and be able to take your money out without unnecessarily putting your investment to foreign exchange risk. So those are the things that they consider. Once those things are in place, you may not need to beg them. They will definitely come in.
But what's your impression about the ease of doing business in Nigeria? And if you, of course, I mean, if you have a client and you need to advise your client, what exactly would you first sell to your client?
You see, there is something there is a risk and there is reward. The only thing I will need to project is the reward. You know why? Because you can control the risk. You know, we are talking about infrastructure, we are talking about biodiesel. The question is that what is the return would you want to get? If you want to get 20% return, then we have to factor in the other costs that must necessarily come, which is maybe the cost of freight and the cost of running the office. Those ones we have to build into the cost before you talk about making a margin. So, look, as far as I'm concerned, I believe in Nigeria, I believe in our market. And I also believe that it is said that it's only when you are ashamed that you can get something to the road in Lagos and you will not sell. As far as you have that boldness, whatever you put on the road, we sell. So if it is especially consumer good, why? They definitely will make it. There is market, a very big market. If you are actually maybe a little bit, all you need to do is to be a little bit different from the competitor. And you know when you are coming to the market, all you need to do is to go and study your competitor and build on their value. Then it now become your value added. And the market will look for you.
I also want us to talk a little bit more about cost of operations. It will seem that because the second quarter before, yes, this second quarter, of course, the end of first quarter, going into the second quarter of 2018, we've seen, a lot of companies spent, largely on the cost of operations. And again, it's as if that also has impacted negatively on their bottom line. at this point, what would be your advice, investment advice for such a client or company?
You see, even when you are making maybe the same turnover of last year, this year, your bottom line could be better if you can cut your costs. There are certain things you can source. There are certain services you can source. You know what make life meaningful is when you begin to do new things in a new way, old things in a new way. So there is a matter of cut cost. If you see most of the results that you have talked about, go through them, you discover that it was cut costing. That cost cutting, that was the advantage. That was how their bottom line was.
Do you foresee a situation now, because you talk about cutting your cost, do you foresee a situation where going into 2019, of course, the election is somewhere around the corner, do you foresee a situation where you see company, pruning down on their cost of spending perhaps, and on operation as well?
Of course. I thought you wanted to talk about sending personnel outside to the job market. I wanted to tell you that is not the only way to cut costs, because sometimes if you look at it, that what is the percentage of personnel salary to most of the costs we are talking about? Cutting costs is another way. It's not just because there are certain things that Machi cannot do. But
that's another way too.
It's another
to also downsize as well.
The question is that how much can you cut from staff salary? Okay. Because there's a limit to which you can drive one staff to work a day.
All right.
What 3 staff can do, even when you are trying to force it on one staff, there's a limit to which he can go with it, except you want him to. In fact, the more you put pressure on him, you can even turn to other performance. So, okay.
Go ahead.
So what you're doing is that 2019 is election year. It's actually, the Armageddon is not coming. The best no, because I think that is the fear we have. Yeah. But the only problem.
But some again is if you say Armageddon is it's not coming.
Armageddon is not coming.
But what we have at the moment is that we have some portfolio investors who are already exiting the market.
They are foreign. I've just give you an analogy of somebody who walk into a house and the wife and the husband are quarreling. It will step aside. They are stepping aside. Right. They are on the line. They are watching what happened. But let me tell you, irrespective of whoever that comes on board, the fact is that you have settled your problem. The fact is that you have settled your court, they will come back. Because Nigeria is one of the most performing, they have the highest performing market in the emerging markets. They know that when they deploy their resources here, they make more return than in any other market. So they definitely will return. The thing is that put your house in order. Once your house in order, will come back. That's exactly what we are experiencing. And you should also understand that we have seen people declaring. I understand that Saraki declared this morning, and we see more of that. And the more they are coming, the more confusion that will be in the air. But we know that there's going to be a number of alliances and alignment and realignment. But I was telling somebody the time we begin to have a good direction is when all the parties have done their primaries. We now know who is the presidential candidate of this party. And people begin to, we like forecasting. People begin to forecast and begin to, this man have this 3 million here, can get this, there will be likelihood or who's going to turn out to be the winner.
Interesting. You talked about emerging markets or frontier market earlier. Would you say Nigeria is an emerging market or frontier market?
We are actually not classifying ourselves, especially MSCI and other indices are classified as an emerging market.
Or are you saying MSCI it's classifying Nigeria as
an emerging market?
Oh, really? Interesting. Okay, let's cross over now to talking about the second half of the year now. What do you see? Where do you see the market, the market trend now in terms of performance in the second half of the year? Of course, we have 4 months to go in the year, almost going to the fourth quarter of the year now. For the rest of the year, let's just take a look at it.
Let me tell you how the market works. We see first quarter is just for 3 months. The earnings, if you compare it to the price, may be very small, maybe negligible. Second quarter, at least that is the middle level. At least you still have some element. But by the time we're in third quarter, from third quarter you can infer what may happen in quarter 4. So
right.
when we begin to see third quarter results by September, then people begin to, if what may likely happen, there are guys that, sorry, there are investors that their concern is what may likely be the dividend payout at the end of quarter 4. So if they see your quarter 1, they see your quarter 2, they see your quarter 3, assuming you made 3 kobo in those 3 quarters, that is 9 kobo. Then that means that they can project that at the end of the year you can make 12 kobo. And if your dividend payout ratio is 30%, then they can say, okay, this may likely what will be paid.
Just before we round off, Mr. Aruna, I want us to look at the positions of investors now. Do you think they should hold their position at the moment, or they should take advantage of what we have?
If I should have to advise candidly, this is the best time to buy.
Oh, really?
It's the contrarian market. Why people are running away, you're running. I have always told people that it's like somebody who went to an empty swimming pool and they sit it down and is waiting for the rain to come. And eventually the rain came and it's falling, and from his ankle to his knee, it's getting to his waist, and people begin to jump in. What will he do? He will jump out because he has had that wetness and coolness that's waiting for. So if you buy now, and by the time people begin to look at those prices, you have already be leaving.
Well, let's leave it there, Mr. Aruna. Thank you very much. Aruna Kebira has been my guest on the show, Chief Dealer, Global View Capital Limited. Thank you for watching, and that's the show for this week. I am Franco Malape. I'll see you again.